Nigerian telecoms infrastructure firm IHS is set to conclude at least 3 separate deals with African operators this year to build and lease back 1,000 towers. IHS manages 4,000 tower sites in Nigeria, Ghana, Sudan and South Sudan, and also owns 900 sites it's leasing to operators and manages on their behalf. For more on the company's growth strategy is the company's CEO Issam Darwish, joining us live from Lagos. Issam, great to have you on the program. Thanks so very much for joining us today. So 1,000 new phone towers is what your target is. You're currently managing 4,000. So give us an indication of how you plan to implement this and what actually spurred the fact to actually come on board and say we want to embark on 1,000 new phone towers. I'm sure the demand scenario is changing quite rapidly.
Thank you for having me. Definitely what you said is right. Sub-Saharan Africa's penetration rates are below 60%, somewhere between 50 and 60%. That's voice. In terms of data, we barely have penetration rates of 10% or less. Many rural areas are not covered. Many complete jurisdictions such as Congo or south of Sudan do not have even proper telecom infrastructure. So there is massive room for growth. New towers are required over the next 5-year period to achieve that growth. And we at IHS, we're ideally positioned because we've been operating for 11 years on the continent. We have built over our history more than 2,000 sites. So we are specialized and understand and have the resource to undertake such a task. So while the company strategy is to identify certain acquisitions and approach operators and buy towers as and where it makes sense, and we're part of that across the continent. A considerable portion of our strategy is also to engage and build new towers, and we've recently raised the required funding to achieve that.
Okay, so give us an indication. I know you've got 900 sites that you're looking at, 1,000 new towers to be built. Are you saying that a lot of the decisions that have been made over the past while have been as a result of operators coming to you and wanting to lease more towers from you? Could you give us an indication of the synergies between the operators and, of course, then the decision to come on board with 1,000 new towers?
Yeah, 3 years ago, operators basically were a bit alien to the concept of sharing. Capital was scarce, ARPUs were not really as low as they were today. The continent had roughly 200 or 300 towers that were being shared. Today, we've moved beyond that. Most operators are convinced with the validity of the model. Today we have roughly around 12,000 towers or more that are being shared on the continent. This is a massive growth from a few hundreds 3 years ago. Of course, as operators move from an ownership model into a model that leases sites from others, whether by selling their own or by leasing new sites, first of all, they unlock capital of their balance sheet. They don't have to use inefficient capital, basically. They can reuse that capital for more efficient investments, such as new technologies, marketing, things like that. Second of all, which is key and equally important, they reduce their OPEX and thus allows them to be able to be more efficient.
As you mentioned, in Sub-Saharan Africa, Issam, as you mentioned, in Sub-Saharan Africa, we're seeing a 60% penetration rate, as you alluded to. How many more towers do we actually, or less, how many more towers would you say we need within this region to, fully then penetrate into the rest of the African continent and ensure that you have mobile penetration rates to the full extent? So I'm talking about 100% penetration rates.
Yeah, we're going to require, if we assume that sharing is going to pick up, which we assume, so if we account for sharing, we're going to still require somewhere between 30 and 50,000 new towers over the next 5 years, which is a massive number. Absolutely.
If we could just look at the cost here, because obviously, you are working with various operators on the continent. I know that it's MTN, Vodafone. I assume that, you're also working with the likes of Bharti, if I'm not mistaken. Could you give us an indication of some of your clientele and also the demand that you're starting to see and the changes within that environment?
Well, we work with basically all the blue chip operators. Etisalat is our client. Airtel, of course, is a client. MTN is a client. So as the CDMA operators and WiMAX operators and other types of operators. It is not a secret. Many of the operators have already done deals over the past 2 years. MTN has sold towers, have announced that they've sold towers in 2 jurisdictions over the past 2 years. Vodafone has done a similar transaction in Ghana. Tigo has sold its towers in 3 of its jurisdictions over the past 2 years. So these are transactions that have been announced. On top of them selling their towers and leasing it back, they're also actively leasing new towers from operators such as ours. So this is a trend that is picking up. This is a trend that we see is accelerating month after month.
Yeah. So you mentioned that you're also going to go to the market to raise debts. We also hear that you might also be considering at some point to delist from the Nigerian Stock Exchange. Could you just tell us about your funding structure going forward?
Well, we've already raised around $250 million last year, and this was basically mainly from the IFC, FMO, Investec, Asset Management, and of course ECP, a DC-based fund. So we already have shareholders that have deep pockets that can help us through the next round. Further to the $250 million round, we're also actively engaged in raising another $200 million, which we hope to conclude within the next 3 months. The delisting aspect is something we may consider. I mean, it all depends upon what is the best interest of the company, but no decision has been made whether we're going to delist or keep our listing.
Issam, if you could...
For now, we're maintaining listing.
Yeah.
Mm-hmm.
Issam, if you could give us also insight into how much one of these towers actually cost to construct.
A tower typically costs, depends upon the region, the area, the country. It can cost between $120,000, $130,000 to $300,000, $400,000. In a country like Nigeria, the average, I would say, between $150,000 and $200,000. In places like DRC, probably could be $300,000. In places like South of Sudan, could be $500,000. So there is this range, right? But I would say somewhere between $120,000 to $200,000, $250,000 is an average.
And Issam, I mean, at the end of the day, we also look at maintenance, and we know that on the African continent, it's slightly more expensive to maintain telecoms towers purely because of electricity constraints and other factors as well. So what kind of numbers, from a margin perspective, are we looking at?
Well, you hit an important point. In the US or Europe, this model is mostly a real estate model. Once the tower is erected, basically it's cost of capital, managing the tenants, as the power. There are no security issues. But in Africa, this is not the case. In Africa, you have, in most countries, power is so unreliable, you have to have a mini power plant that is installed on every site. Today, unfortunately, most of these mini power plants, so-called mini power plants, are diesel operated, which we're moving away from, by the way. IHS is pioneering. We've just installed the largest commercially viable solar operated site, and we hope to roll over this model. But as it is now, unfortunately, the continent still relies on diesel. And the logistical network that goes beyond that, behind that. In Nigeria, for example, to give you an idea about the number, Nigeria has roughly around 20,000 sites. Most of these sites all operate on diesel. On average, the monthly diesel bill is around $2,000. That means that the country spends $40 million a month, approximately, on diesel. $500 million a year. That's what the MNOs spend, including us, on diesel. Yeah. This is highly inefficient.
So, Issam, you're talking about new technologies being implemented. What about the CDMA debate that is heating up, and of course that using radio technology as well? Is this going to be a challenge for you going forward? How do you see this playing out?
Well, the tower sharing concept or industry is really insensitive to technological changes. As long as the system is wireless, as long as you need frequencies to transmit, whatever the technology, the underlying technology used is, it doesn't matter to us, whether it's GSM, whether it's CDMA, whether we move to broadband networks such as LTE. These still require towers, and that's what we provide. We provide the towers.